Hey everyone, it's Like Evolution here, and today we're diving into a topic that's always on everyone's mind: how to build wealth in the stock market. Now, I'm not promising you'll get rich quick. In fact, let's just get that out of our system right now. There are no shortcuts in investing, but what I can offer you are 5 proven strategies that have helped countless people, including myself, build long-term wealth. We'll be exploring everything from long-term investing to dividend strategies, breaking down complex concepts into easy-to-understand advice. Whether you're just starting out or looking to diversify your portfolio, these strategies can help you make smarter investment decisions. So, grab your notebooks because we're about to unlock the secrets to successful stock market investing. Let's get started! Now, when it comes to building lasting wealth, long-term investing is the name of the game. Think of it like planting a tree. You carefully choose a sapling, you nurture it, you give it time to grow. You don't expect to harvest fruit the next day, right? The same principle applies to investing. With long-term investing, we're talking about buying shares in solid companies and holding on to them for years, even decades. We're talking about ignoring the daily ups and downs of the market, the noise, the hype. Because let's be honest, the stock market can be like a roller coaster sometimes. But here's the thing, over the long haul, the stock market tends to go up. It reflects the growth of the economy, of innovation, of human ingenuity. And by investing in great companies and letting time work its magic, you're essentially riding that wave of growth. Now, I know what you might be thinking, but Graham, how do I choose the right companies? Well, it all starts with research. Look for companies with a strong track record of profitability, a competitive edge in their industry, and a solid management team. Think about companies that are solving real problems, companies you believe in. Remember, we're not talking about gambling here. We're not chasing the next hot stock tip. We're talking about becoming part owners in businesses we believe have a bright future. And by holding on to those investments for the long term, you're giving them the chance to compound your returns year after year, because that's the beauty of compounding. It's like a snowball effect. As your investments grow, they generate more earnings, which in turn generate even more earnings. And over time, those gains can really add up. So be patient, be disciplined, and let the power of long-term investing work its magic. Now, let's talk about another powerful strategy: dividend investing. Imagine getting paid just for owning a piece of a company. Sounds pretty good, right? Well, that's exactly what dividends are. They're like quarterly or annual payments that companies make to their shareholders, and they can be a fantastic source of passive income. Think of it like this. You buy a house, and instead of paying rent every month, you're the one collecting rent. That's essentially what dividend investing can feel like. You're getting paid just for being a shareholder. Now, not all companies pay dividends. Some companies reinvest all their profits back into the business, which is also a good thing if you're a long-term investor. But there are plenty of established, profitable companies out there that share a portion of their profits with their investors through dividends. And the best part is, those dividends can provide you with a steady stream of income, whether the market is up or down. It's like having your investments work double duty for you, growing over time and putting money in your pocket. Now, when it comes to dividend investing, it's important to look for companies with a history of consistent dividend payments, ideally companies that have been increasing their dividends year after year. This shows that the company is financially healthy and committed to rewarding its shareholders. And just like with long-term investing, diversification is key. Don't put all your eggs in one basket. Instead, build a diversified portfolio of dividend-paying stocks across different industries to spread your risk. So if you're looking for a way to generate passive income and potentially live off your investments one day, dividend investing is definitely worth exploring. It's a proven strategy that can help you build wealth and enjoy financial freedom. Now, let's talk about one of the most effective ways to navigate the ups and downs of the market: dollar cost averaging. See, one of the biggest mistakes investors make is trying to time the market, trying to predict when to buy low and sell high. But the truth is, even the experts get it wrong all the time. Market timing is notoriously difficult, and it often leads to more losses than gains. That's where dollar cost averaging comes in. It's a simple yet powerful strategy that takes the emotion out of investing and helps you build wealth steadily over time. Here's how it works. Instead of trying to invest a lump sum of money all at once, you break it down into smaller, regular investments over a set period of time. This could be monthly, quarterly, whatever works best for you. Now here's the beauty of dollar cost averaging. When the market is down, your money buys you more shares. And when the market is up, you're buying fewer shares, but those shares are worth more. It's a win-win situation. By investing consistently, you're essentially averaging out your purchase price over time, reducing the impact of market volatility on your portfolio. It's like a built-in shock absorber for your investments. And the best part is, dollar cost averaging takes the guesswork out of investing. You don't need to predict the market, you just need to stay disciplined and stick to your plan. It's a strategy that works in bull markets, bear markets, and everything in between. So whether you're investing in individual stocks, ETFs, or even real estate, consider using dollar cost averaging to your advantage. It's a time-tested strategy that can help you build wealth steadily and reach your financial goals. Now, let's talk about one of the easiest and most effective ways to invest in the stock market: ETFs and index funds. These investment vehicles have become incredibly popular in recent years, and for good reason. They offer instant diversification, low costs, and a simple way to track the performance of the overall market or specific sectors. So, what exactly are ETFs and index funds? Well, think of them like baskets of stocks. Instead of buying individual stocks, you're buying into a fund that holds a collection of stocks, bonds, or other assets. Index funds, as the name suggests, track a specific market index, like the S&P 500 or the Nasdaq 100. So by investing in an S&P 500 index fund, you're essentially buying a tiny piece of ownership in the 500 largest publicly traded companies in the US. ETFs, or exchange-traded funds, are similar to index funds, but they trade on stock exchanges just like individual stocks. This means you can buy or sell ETFs throughout the trading day, just like you would with any other stock. Now, one of the biggest advantages of ETFs and index funds is their diversification. By investing in a single fund, you're spreading your money across hundreds or even thousands of different stocks or bonds. This diversification helps to reduce your risk significantly. Another advantage is their low costs. Because ETFs and index funds are passively managed, meaning they track an index rather than trying to beat the market, they have much lower expense ratios compared to actively managed mutual funds. And those lower fees can make a big difference in your returns over the long run. So whether you're just starting out or you're a seasoned investor, ETFs and index funds can be a valuable addition to your portfolio. They offer a simple, low-cost and diversified way to invest in the stock market and participate in its long-term growth potential. Now, for those of you who are looking for a more hands-on approach to investing, let's talk about active trading and technical analysis. But before we dive in, I want to be upfront with you. This is not for the faint of heart. Active trading involves buying and selling stocks frequently, often based on short-term price movements and market trends. It's a high-risk, high-reward strategy that requires a deep understanding of the markets, a lot of time and dedication, and a strong stomach for volatility. Technical analysis is a key tool used by active traders. It involves studying charts and patterns in stock prices to identify potential trading opportunities. Traders look for things like support and resistance levels, moving averages, and other technical indicators to try to predict where a stock price might be headed. Now, I'm not going to sugarcoat it. Active trading is incredibly challenging, and the vast majority of individual investors who try it end up losing money. The markets are complex, and it's very difficult to consistently predict short-term price movements. Even professional traders with years of experience and sophisticated algorithms struggle to beat the market consistently. In fact, studies have shown that most actively managed mutual funds underperform their benchmark indexes over the long term. So why do people still engage in active trading? Well, for some, it's the allure of quick profits. The idea of buying low and selling high, of timing the market perfectly, can be very tempting. But for most people, active trading is simply not a viable long-term investment strategy. It's time-consuming, stressful, and the odds of success are stacked against you. If you're serious about active trading, it's crucial to educate yourself thoroughly, start small, and be prepared to lose money. It's also important to have a solid risk management plan in place to protect your capital. So there you have it. 5 proven ways to grow your wealth in the stock market. Remember, building wealth takes time, discipline, and a solid understanding of your investment strategy. Whether you choose to embrace the patience of long-term investing, the steady income of dividends, the disciplined approach of dollar-cost averaging, the simplicity of ETFs and index funds, or the excitement yet heightened risk of active trading, the most important thing is to take action. Don't let fear or procrastination hold you back from growing your wealth. The stock market can be intimidating, but with the right knowledge and strategies, it can be a powerful tool for building a brighter financial future. If you're interested in learning more about stock market strategies, make sure to check out my other videos on this channel. And as always, if you have any specific topics you'd like me to cover, let me know in the comments. Until next time, take care and keep investing wisely.